Monday, August 26th, Stan Ehrlich, market analysis. I start out with the stock market indexes, Spider, Dow, NASDAQ, Russell, and go to the futures markets, interest rates, energies, and the others. Now, today, we did get stopped out of our short E-mini. Very unfortunate, but didn't have a big loss. Got to have a stop someplace. Not all of them work great. Like the last buy signal, it was incredible for the E-mini. And I didn't think this buy signal was going to go too far, but it went a lot farther than I expected. Now, just because we're out of this particular trade, got stopped out near the high, happens, does not mean that the market is still potentially topping out. We have a higher high today. I'm going to go back to my daily chart. As you can see, we were overbought within the last few days, which is good. And we could have an outside down day again today, not unheard of. Happened 2 days after one over there that didn't work all that well, but a little bit. So if we get a round of weakness here all of a sudden that drops it below yesterday, that's Friday's lows, we'll have another bearish engulfing red signal. Hasn't happened yet. The rally high right there made it just slightly above and stopped us out. But again, it's set itself up for another bearish engulfing. Now we do need to get below this line down here, which is 55.82, and that will trigger a new sell signal completely. But again, hasn't happened yet. And it wouldn't be too far down. Remember, we're only down 7 points now, translating into about 0.70 cents on the spider. Next chart. Spider. Not an outside down day, but overbought now for 1, 2, 3, 4 days. And we did get bunked out of our shorts. Well, no, we didn't on the spider, and I'll explain why in a minute. It's in the code automatically. It's been in there for years. Works awfully damn well sometimes, and this could be one of those times. Here we go. The stop is now up here at around 565 and small change. And I'll explain why. Normally, it's above the high of the signal day, which was about 563 and a half. But the way it acted on Friday is the reason why our stop jumped up automatically to give the market a little more elbow room to see if it'll behave. And right now we're down, 60 cents. Not what I would call a down day with any significance. I really want it to go down below Friday's lows, in particular, the first signal low, which was Thursday of last week. That would probably signal some more bearish signals on a variety of techniques and push the market a lot lower. Downside breakout in a minor sense, but nevertheless. Spider, excuse my cough, 1 minute chart. And this is a 5 minute, not a 1 minute. Our entry on Thursday, scalp, made some good money. We were holding the entry on Thursday through Friday because when it opened on Friday, it opened above our previous stop level for Thursday. Now that most people would be placing an open order GTC, and on the opening it hit it or above it, and as a result you're out. Now even at the moment that looks like a good idea because it's trading higher than where you would have gotten offset in the first 60 seconds of trading, first tick or two actually. So what we do is we put the stop at higher levels in order to give the market a little, and that's a user's input choice, elbow room to see if it can't turn around still. And again, many times that actually happens and turns a losing trade. You would have been out somewhere around here, into a winning trade, which could be an hour or two from now. It could be a green trade line instead of at the moment red. Next chart, QQQ. We have the high of the market on Thursday of last week, period. We have trades that we got into on Friday, and I'm showing you the ER3 entries and the ER3 scalp on the daily data chart. Now, seeing a scalp on a daily chart is not easy, so you basically look at the numbers. But an overnight is not offset, and the trade line is green, and it is making a little money at the moment. And we have made new lows for the last 1, 2, 3, 4, 5 previous days, just barely 5. And if it stays a little lower than where it is, I'd like that more. Great. Bear signal, took ER1 trade and took ER3 trades we're looking at. Profitable at the moment. Great. Here's the details. On Friday, it rallied back to our trigger line from the signal on Thursday, this big down day on Thursday. So it got high enough to go short the ER3, which it did. Held on for a while, and then the market dropped so fast, so quick that our stop dropped like crazy, which it should have and did. And we locked in a small profit on a scalp, and that's the idea. The overnight version we held on to, and we had a little bit of a problem on Friday for a little while, and it closed somewhat ambiguously with a small loss, I'm sure. But this morning there wasn't any further strength, and it just dropped off into new lows, and our trade line is green. This is working great. Our stop, I'll probably start to work it a little lower, changing the kicker if we're still short, maybe even as much as tomorrow, because again, I don't like giving a profitable trade, turning a profitable trade into a losing trade, almost no matter what circumstance. So I could do that right now. I'm not going to do that right now. Darn cough. Sorry about that, people. I apologize. Now, NASDAQ, daily data, we got the top of the market on the NQ, let alone the QQQ. And we're still in the ER3 trade there as well. And I believe the scalp actually lost a little money. Yeah, on a small day trade loss on Friday, but now a really great ER3 overnight position trade and holding on. Stop could be lowered significantly like the daily data chart. They're the same stop. It's just the same kicker, just whichever chart you want to draw. Same strategy, same numbers, same entries, etc. Just the data that's being displayed, the calculations are all based on the same data stream. Now the YM has been ridiculously firm here and strong on Friday, and then today we're still up on the day. We went through the bear trend line. We're approaching what one might think would be a possible double top formation. If everything else starts to go down more quickly, and that would be including today, this could give up the ghost and just drop off and reverse and be a double top. We are not quite at RSI 75. We're at 74.88 for today's high, and that's super close, obviously. But, rules are rules. Didn't hit 75 or higher, so didn't turn yellow. So I'm not going to get a red bearish engulfing, but a bearish engulfing would be very happy. Next, the exact thing, but it's only a 5-minute chart. Next, we got the Russell. We got a buy signal, and it's worked like crazy. If you slowed down the stop, you probably are still long, but we took a profit the second day after we're in the trade. That's because of the way it acted. On that date, let me see if I can find that for you. Yeah, we got in. It rallied sharply, bringing our stop up very, very quickly on that day. And as it backed up, hey, took a profit. Not really complaining over spilt milk at all. So I like what I see, but it's not turning around yet. Here we go. Interest rate futures, bonds. You know that I'm looking for this market to stall out here and start some sort of a zigzag situation down into October and down into my green circle. I'm not bearish. I'm short term for a month and a half, reactionary, and what I believe to be the beginning of a long term, much longer term bull market, probably for a year or more. And the same thing goes for notes, almost exactly, timing wise. Prices are a little different, and the formations are the same. Crude, very strong day today, like Friday, but we're between a rock and a hard spot. And this pennant formation is just getting narrower and narrower. And I talked about the pennant several weeks ago. And it basically bounced off the bottom bull trend line, but not super accurate this time. So where's it going to stop? Resistance, bear trend line, top of the pennant, and in overbought conditions? Well, yeah, maybe if it pops up enough in the next day or two. Okay, natural gas, gapping up a bit this morning. Not overbought or oversold. Got to wait for some signals, but I don't expect a rally much more than 2.3, maybe 310, because of the resistance area that stopped it already twice before on two other rallies there and there. This does not necessarily look like a head and shoulder bottom, but you could get a lopsided pattern out of this if Friday's low stayed Friday's low. So I wasn't necessarily expecting Friday's activity to lead to this pop up on Monday, but there it is. We'll see if it can break out. Now, if it is a lopsided head and shoulder bottom, what are we going to get? What are we going to get out of it? Probably only up to about two and a half, maybe a little more. Remember, these are minimum upside objectives. If it works, we'll keep an eye on this. Next, high grade heating oil hit support, did get oversold, and I liked what I saw on Friday, as I said. So we got more follow through today. But again, where is it going to go? I only think it's going to go up to 2.4, maybe 2.5. This is a longer term, lower highs, lower lows, bear market since September of 23, almost a full year. That's next month, only a week away. So, yeah, sell the rallies. Next, gold. Doesn't seem to want to go down. I'm a little frustrated here. I expected this thing to top out and start closing below the old bullish resistance line, which we are 100% for the first time above that line so far today. Every other day has been a little bit above, a little bit below, and we never closed that much above until the close today might be convincing me that we've got more upside potential. I'm not sure. I'm on the edge of seeing it fail or turning a little friendly. Now, because the size of the trading range, that's normally what you would use for the stick of the depth of the formation from top to bottom here, you would extend that from here up the same amount. And that would be fairly decent. I'm going to say 27.50, leaning toward 27.50. Silver, not at all the same story, but I'm getting a little stronger than I'd like and have to accept the strength momentarily because we're still in this head and shoulder top like platinum. And what bothers me now is that, yeah, we did get a buy signal on the bottom, but at the time I said I didn't trust it very much, kind of like that other market, I forgot which one it was, that has gone up much, one of the indexes. So maybe the YM. So the point here is the signals are working great. My opinion is a little off at the moment. I don't trade on my opinions, I trade on the green and red ER signals. Next, we have a little bit of strength in platinum, slight new lows. At the moment, it's not really hanging on to it much. This head and shoulder top hasn't got quite the problems that the gold might have, silver might have. So I think all the metals are about to hit the dust here and turn down, but I don't see it starting. So I'm a little bit cautious. Copper, couple of buy signals near the bottom, working fine. New high for the rally so far today. Going to get up to 4.3, I think, or maybe even 4.4. Yeah, okay. What can I say? It's working. We did get stocked out of our long position on Thursday of last week, right near the low, but you can't keep changing your stop all the time, especially if it's in the wrong direction. And then the strategy never does that. So except in gap code. So we're out with a profit. but I'm still liking what I'm seeing, and I think it's going to go a little higher. We could have changed our stop and lowered it, but you're not supposed to do that. Now, today is a brand new first day. Pay attention. Grain markets are acting a little bit more friendly lately. The whole group. New buy signal in soybeans. Outside update. Brand new buy signal. Where's it going to go? First, I think it's going to go up to 10.13 and maybe 10.35. Now, depending upon how this works, if it works, we could get up even further, and this is very solid, major resistance, 11.045. That's my ultimate upside if we can get that much strength in the soybeans. Soybean oil. Friday, we had a bullish engulfing working great, and we're still long. Our stop has come up to approximately entry price, and our current profit is growing. New high, probable new high close, working great. Only problem, I didn't buy the low day or get a buy signal on the low day. Sorry. Next, not a buy signal per se, but an outside up day happening right now in soybean meal at a support level, at a bull trend line, and I'm liking what I'm seeing overall. There's no problem with the way this is acting. Now I'm getting this bullish engulfing, bouncing off the support and the bull trend line after being oversold at the bottom. So it's going to rally a little more, I think. Where to? I'm sorry, only 317. Well, that's the first stop. There's a lot of resistance here at 22, and then the major area of significant resistance is around 37.38, 337, 338. Okay, what about corn? Well, it's getting close to oversold, extremely close, but it's also dropping below a support area. Here we have a problem. Oversold implies it's going to rally, and maybe this is a false support area downside breakout. This one deserves a lot of careful watching and alarms here in the next day or two or three. Could turn up. Wheat, same story. Broken a new low ground, not particularly a support area, oversold for the third day, and getting down to 20, and that's pretty low on the oversold scale, especially if you were to hit something like 15 or 10. Below 10, I start screaming bloody murder, buy it, watch the microscope carefully. Cattle, brand new buy signal today. First day. We are higher than Friday's high. That means the new trade is in a long, profitable position at the moment. Had a rally back up to that resistance line now that we're trading below it for several days. Had gotten oversold, so no surprise we're getting a rally, but the buy signal is great. This adds a lot of zip, pump, bang to the rally I'm expecting. So we're looking for 180 and 3/4 minimum. And now I can't rule out something like 184 plus. I don't think that's out of the question. Next, Miss Piggy. Overbought, just about the opposite of cattle. Looks like it's going to top out, but it's got some support just a little lower and then lower again. We didn't catch the bottom, but it was oversold. So Miss Piggy looks like it could flounder a little here, slip back slightly, and then start to work its way back up again. We're back to the E-mini. Looks like it's been climbing a little. This is the 5-minute chart. So actually it started to dip down here while I'm yakking away. You guys have a great day. Profitable trading to you.